Hello students, welcome to Mr. TK classes. Today we are doing the accounting equation, and our question for today is question 2 from Intake College, November 2015 question paper. So the question reads, show the effect of the following on the accounting equation. Assets is equals to owner's equity plus liability. Do not show net effects of transaction. So these are the transactions that we have from A to C. Alright, so we are going to do our answer here. Okay, so from A to C. So in the question they requested us to do assets is equals to owner's equity plus liability. These are the two columns I have just added for more understanding. Alright, so we go to A. A debtor Picus paid his debt of 500. So if we have a debtor, it means that as a company we have someone who owes us, right? So if that person pays, it means that the bank account is going to increase with 500, and the bank falls under assets. So our assets are going to increase with 500. And we also have another account which is affected there. Remember, this is a debtor paying. So our debtors control are going to decrease with 500. So this does not affect the owner's equity. This does not affect the liabilities. So which account is going to be debited? Remember, we have the bank account, and the bank account is increasing. So if a bank account increases, we debit it because it is an asset account. If an asset account increases, we debit. If an asset account decreases, we credit. So we have an asset account that is also decreasing here. It is called debtors control. It is called debtors control. Then we move on to B. Purchase the land for 180,000. All right, let's end there. Purchase the land for 180,000. So we are going to have an asset called the land, right, for 180,000, right? Then which other account is affected? Raised a long-term loan to pay for the purchase. So we raised a long-term loan to pay for the purchase. So which account is affected? Loan account. And loan is a liability. Our liabilities are increasing with 180,000. So what you have to make sure whenever you are doing the accounting equation, you have to make sure that your assets are always equal to the other side, which is owner's equity plus liability. If you look at the first one, plus 500 minus 500 is 0. So 0 is equals to 0. Then here 180,000 is equals to 180,000 this side. Okay. Then which account which accounts are affected, right? And which account is going to be debited? The account that is going to be debited is land. When assets increase, you debit because assets have a debit balance. Assets increase on the debit side and decrease on the credit side. Then which account is going to be credited is loan. The loan account is increasing, right? So if the loan account is increasing, we credit because loan, or let me just say, because the liabilities have a credit balance, right? If they have a credit balance, it means that they increase on the credit side, then they decrease on the debit side. We move on to the next one. We have a cash sale here. All right, cash sale per cash register tape 5,400. So if we make a cash sale, what is happening? It means that we are receiving cash, right? 5,400. And remember, this is a sale. This is a sale. So if we sell, it means we are having sales, and sales fall under income. And what you have to know about income, the effect of income is that owner's equity will increase. right? Owner's equity will increase. And the effect of expenses is that owner's equity will decrease. So owner's equity will increase with 5,400. Then here, which account is affected? Bank, right? And which other account is affected? Sales, right? So bank, remember we said this one is an asset account. It has increased here, so we are going to debit. And the other one that has caused owner's equity to increase is an income. And whenever we have an income, we have to credit, right? Can then we move on to the other part. Cost of sales amounted to 3,630. Cost of sales amounted to 3,630. So what you have to know about cost of sales is that these goods that we have sold here, we bought them at a certain amount. So initially when we bought these goods, we debited the trading stock account because we're saying we are receiving stock, right? We're saying we're receiving stock, so we debited the trading stock account because we're saying we have our assets now, we have received the stock. But now that we have sold those goods that we initially bought at 3,630, what are we going to do? We are going to credit that trading stock account because we are saying that amount that we previously debited when we bought the goods, right? We have to cancel it because those goods have gone out of the organization now, right? These goods have gone out of the organization now, but when we bought them at 3,630, we debited. So now they've gone out. Let us credit. So the account to be credited here is trading stock account. So this transaction is meant, okay, let me just say trading stock. So this transaction is meant to cancel that initial that initial entry that we made when we bought these goods. All right, then the other account that is affected is cost of sales account. The other account that is affected is cost of sales account. Oh, sorry. The other account that is affected is cost of sales account. Ken, how is this account affected? Why is this account affecting the owner's equity? Cost of sales is an expense account. Why are we saying it's an expense account? Because they are saying these goods that we have sold now, we bought them at a certain price. So when you're buying, it means when you're buying, that's an expense. So it's an expense account. So what does an expense do? It decreases owner's equity. Which account is going to be debited? Cost of sales. Okay. So whenever you're having an expense account, just know that it increases on the debit side and decreases on the credit side. So don't be confused by income, don't be confused by expenses. Why? Because we are saying income increases owner's equity. So if they increase owner's equity, they have to increase on the credit side. Why? Because owner's equity increase on the credit side. Expenses decrease owner's equity. So if they decrease owner's equity, they have to be opposite of this. They will increase on the debit side. So the summary is that this side of the accounting equation has a debit balance, increase on the debit side and decrease on the credit side. This side of the accounting equation has a credit balance. It increases on the credit side and decrease on the debit side. So I will just make a summary, right? Assets, they have a debit balance. What does this mean? They increase on the credit side and decrease on the, okay, let me just do the summary here. What does this mean? They increase on the debit side and decrease on the credit side and decrease on the credit side. That's what it means when you say an account is. Then this other side now, this other side, it has a credit balance, right? So we are going to say owner's equity, owner's equity, owner's equity. This one has a credit balance, owner's equity. This one has a credit balance. Now you know what that means. It means that it increased on the credit side and decreased on the debit side, right? Okay, I'm not gonna write. Then liabilities, liabilities. These ones, they have a credit balance. They increase on the credit side, this one. So this side, you just have to know that these accounts have a credit balance. So the following are now emanating from this. The following: income. Since we said income increase owner's equity, it means that it has to be the same as owner's equity. Since we said expenses decrease owner's equity, it means that they have to be opposite, right? They have to be opposite. So we have this and this, which are debit, and the other ones are credit. Thank you. We are done with our class for today. Thank you very much.